In Chapter 17, you learned how to prepare a statement of cash flows. So let's run through an example problem here. For Rojas Corporation, we have comparative balance sheets for 2017 and 2016. Then we have some additional information down at the bottom with our net income, dividends that were declared and paid, what the land was sold for during the year, and then we're told using the indirect method, we need to prepare a statement of cash flows for 2017. So let's go through the comparative balance sheets and figure out if accounts increased or decreased, right? So accounts receivable decreased by 2,200. Land decreased by 6,000. That's going to come into play a little bit later. Our depreciation expense in 2017 was 5,000, right? Because our accumulated depreciation went from 10,000 to 15,000. So we had a depreciation expense of 5,000 that year. Our accounts payable decreased by 18,730. Our common stock increased by 6,000. Then we have our net income amount, our dividends paid amount, our proceeds from the sale, and then we have this loss on the sale. So this is where that decrease in land comes back into play. So we sold land for $4,900, but the land that we sold was worth $6,000 on our books. So we only got $4,900 for something that we thought was worth $6,000. So we lost $1,100 on that sale. So now we have all of our pieces that we're going to be putting into our statement of cash flows. We need to figure out, is it an operating, investing, or financing? Right? So accounts receivable, a change in current assets, that's an operating activity. Depreciation expense, that's a non-cash expense. Non-cash expenses go into the operating activity portion. Accounts payable decreased, that's a change in current liabilities. So your changes in current liabilities are in operating. Common stock increasing. So if our common stock increased, that's a financing activity. Your net income, that goes at the very top of your operating activity section. Dividends paid, that's financing. The proceeds from the sale of land, so the money that we actually got when we sold the land, that's an investing activity. And then the loss on the sale of the land, that goes into operating. So now we can start with our statement of cash flows. So we start with the cash flows from operating activities. And the very first thing we want to put in our statement is our net income. So our net income in this problem was $22,630. And then we will have adjustments to reconcile our net income to net cash provided by operating activities. Now, this could also be adjustments to reconcile net income to net cash used by operating activities. That will depend based off of whether our operating activities had net cash provided or net cash used at the end. Right, so these are all of the adjustments that we're making to our net income. So this is your decrease in accounts receivable. Well, we know accounts receivable decreased by 2,200. So did that increase or decrease our cash? Well, if our accounts receivable is decreasing, that means that people are giving us money. People don't owe us as much because they've paid us. So we will add 2,200. Our next piece, the depreciation expense. So non-cash expenses have to be added in your operating activity section. The reasoning is because your depreciation expense would have been taken away from your revenues to find your net income. But when something's depreciating, you don't actually have to pay out any money, right? So we want to add that depreciation expense back in to our net income. Our next one, a decrease in accounts payable. So our accounts payable decreased by roughly 18,000, right? So what makes accounts payable decrease? Well, paying people back. So a decrease in accounts payable is a decrease in cash. So we'll subtract that number when we do our calculations. Then we have our loss on the sale. So we're going to treat this in a similar way that we did our depreciation expense. We have to add back in this loss because it would have been subtracted out when finding your net income. But just because you lost money on the sale of land doesn't mean that you are actually writing someone a check for $1,100. So we have to add this back into our net income on our statement of cash flows. So if we add up those four adjustments, we get a negative $10,430. Then our net cash provided by operating activities, we take our net income and we would add a negative $10,430 to get $12,200. Now, because that $12,000 is positive, that's what makes this net cash provided instead of net cash used by operating activities. So after the operating activities section, we can move on to the cash flows from investing activities. So we take a look up in the upper left. We only had one investing activity. That was the proceeds from the sale of land. So we'll write sale of land, and then we need to think, okay, if we sold land for $4,900, are we getting that money or are we spending that money? Well, if you sell land, you get the money. So it's going to be a positive $4,900. Now, if we had multiple investing activities, we would have to add and subtract these numbers and find our net cash provided or used by investing activities. But we only have one. So we don't need to calculate that number. We can just leave it there with our one investing activity. Now we move on to our cash flows from financing. So we had two different financing activities. The first one, the issuance of common stock. So if we issued common stock, what are we going to be getting in return? Well, we're probably going to be getting money, right? So our cash increased by $6,000. Then we paid dividends of $19,500. So payment of dividends, and we think if we're paying out these dividends, that means that we're losing cash. So we subtract $19,500. So our net cash used by financing activities is $13,500. And you'll notice that $13,500 is a negative number, and so we have net cash used instead of net cash provided. Now, we can figure out our net increase in cash. To do that, we take our net cash provided by operating activities, the $12,200, add in our cash provided by investing activities, that's the $4,900, and then subtract out our net cash used by financing activities, the $13,500, and you will see that we have a net increase in cash of $3,600. Well, our cash at the beginning of the period was $10,700. So if we add $10,700 with our net increase in cash of $3,600, you get your cash at the end of the period of $14,300. And those were your cash amounts for your 2 years in your balance sheet at the beginning of the problem.